All right, now we're gonna dive into return on investment capital. Wallace, they all know you by now, man. So I'll follow your lead. Let's go.
All right, good. So this segment is return on investment capital. Let's go back to Tyson Foods since we're still there. All right, from here, you want to go to the financial segment. We can go. You see it right there where market is right there. You can get to it faster there, the way we went to it earlier. But click
So
financials
here or here,
right
right?
there. Yep.
Okay. So I'll use the top one this time.
All right. Here, you see the overview, income statement, balance sheet. We want to go to statistics. All right. So scroll down more, and it'll give you'll see a lot of the things that are going on. You see same thing with market cap. I told you how good that was. You see the market cap grew from 25 billion all the way up to 27 billion the way it is now. They had some down years or whatnot. If you keep going down, I told you about the shares outstanding, and we go down to market capitalization, and it is right here, return on invested capital percentage. All right, so here we're looking at a company that is going to have a good return on investment per capital, right? And a good number to use here. So let's say, for instance, a rule of thumb, and you can expand it or contract it as well as you want, as much as you want. The more you start to understand this. But the rule of thumb is that anything that exceeds 2% is a good company that is returning on the invested capital. Anything underneath 2%, real simple, anything underneath 2% is not doing well as far as, there's some terms that say destroying the return on capital, right? And if you look at Tyson Foods, you remember I told you earlier when we looked at the income statement, we saw some issues with growth, revenue growth. We saw some issues with earnings per share growth, but the market capitalization is pretty high. That means that they have they can sustain some of those pain points, from a year-to-year basis until they get their stuff together. But if you look at return on investment capital, it's well above 2%. Even though they've been falling for the last couple of years, but they're still doing a really, really good percentage as far as return on investment capital. And you want to use that as a basis. Again, it depends on how good you get, and certain companies would have more. So say for instance, certain industries, you want a bigger number, and we could look that up at during the course or whatnot. But a barometer, a good basis is 2% or more.